Good afternoon, everybody. Doug Burson here. Glad to talk to you guys again. It's been a little bit, but there's a lot that's gone on this season. First of all, I just want to thank you for your patience. It's been a lot of extra work here, and you guys have been great. You've given us some grace, and we appreciate that. We're behind. We've been behind. We started behind, and we're still behind, but we are catching up slowly, so that's good news. And there's a lot of things that have changed. So I'm going to go over some of the things that have changed, try to clarify a few things, and then at the end, those of you who are worried about doing estimated tax payments or paying your taxes, hang out to the end, and I'll show you how to go about doing that too. So try to do this pretty quick. Some of these things we'll probably get into more detail post-tax season. There's a lot of new stuff. Like I said, this season started late, and then they changed the rules on us multiple times and added it in forms. So it's been a good time, but we're getting through it. And once again, thank you. So let's go ahead and get started. First of all, one of the big ones that held us up was unemployment. And unemployment is not taxable now, as most of you know, if you have less than $10,200. The thing is, though, is if you make more than $150,000, then you don't get that deduction. So there's some opportunity here for those of you who make more than that to consider potentially doing a married filing separate versus a married filing joint. And I did that with a client yesterday. Ended up saving him a ton of money because once we did that, they both qualified because it is a cliff. If you hit 150, there's nothing. But if you're married filing separate, you both get 150. So it's a big opportunity for those of you that may be in that situation. And we may have to look at that based on your own tax return. But I think we've caught those that came through, so I wouldn't worry about it too much. But if you think we didn't, give us a call and we'll go through that. The IRS has also said you're not going to need to amend your tax return. And that's partially true. So if we already filed your return, you had unemployment, and it was before they changed the rules, the IRS says don't worry about it. We're going to correct it for you, and we will send out additional money. I got two things to say on that. One is, if that's you, when you get that change and you get a letter from the IRS saying they've updated it, I ask that you would please send us a copy of that so we can update your record so that next year when we do your tax return, we have the right information for doing next year because it affects a lot of calculations. So any changes they do, make sure you send them to me. On top of that, we want to make sure they did it right. So just because they say they did the changes right doesn't mean they actually did. I don't think they'll mess it up necessarily, but we just want to make sure. And I said two things, I lied. Another one is the state. IRS has said they'll fix it. That doesn't mean the state will. And we don't know if the states are going to be able to. So we're going to probably have to amend anyway for the state depending on what's going on your return. Also, when it comes to the states, for those of us around our office, you're going to be okay in the fact that Missouri and Kansas follow federal rule. So if it's not taxable at the federal level, it's not going to be taxable at the state level, and that's why I think we're going to have to amend those states even if they do fix the federal. But there are states where they aren't following, so if you're not in Missouri or Kansas, you have to look at those states separately because I can't cover all 50 states in one short video. But Missouri and Kansas follow federal law on that. Okay, next topic, advanced premium tax credit, and that's for those of you who received the Affordable Care Act or Obamacare, whatever you want to call it, and you get assistance for your insurance. And if you got too much, you know, at least most of you do, that you have to pay it back. Well, what they've said is in 2020, if you receive too much, you're not going to have to pay it back. And once again, like unemployment, they said if you've already filed, don't worry about it, we will fix it. Well, on that same like we did on the last one, if they do that, please send me the notice so that I can update our tax program so that next year it rolls forward properly, and so that we can just look and make sure their math was right. Because while I'm sure they're going to try to do it the best they can, sometimes they don't make those adjustments accurately, and we still may need to amend. So just send us those letters as they come in, and will keep your file up to date. Employee retention credit. Now this one's going to affect a lot of our business clients, and we'll do a separate video on this. So if you are a small business client and you were partially closed last year or this year due to a mandate, or if your revenue was down by 50% last year or 20% this year, if any of that sounds like you, I want you to come back. I'm going to try to get a video out on that later this week as well. Look at that. There could be some huge opportunities for you, and we want to be there to help you through on that. So look for that separately. I'm not gonna cover that in this video because that's very specific, but it could be a big deal, and I want you to know what's going on that. Next thing is the EIP, the third one, the third stimulus payment, the $1,400 apiece. What they have said is if you did not qualify based on your 2019 tax return, but when we filed the 2020, your income was down and you do qualify, you're not going to need to do anything. They will adjust the amount and send it to you later this summer. Don't know exactly when, but they're supposed to try to process those as quickly as possible. Same thing. I need you to keep track of that for next year because I have a feeling we may have to do some reconciliation last year just like we did this year. And so if you keep track of those, I know last year a lot of you got the $600 payments and the $1,200 payments. You got the letter. We'd never been there before, didn't think about it, and we tossed it away. Well, now we're doing the tax return and we're having to go back and try to figure it out because we didn't retain it. So let's make sure we keep those, and that'll help us be ready to do taxes next year. Another thing is the IRS did extend the deadline. A lot of us thought they would take it to July. They didn't. They took it to May 15th. But it's important you understand that, one, this is only for individuals. Only individuals got extended to May 15th, and they extended the amount of time for you to file and to pay. They've also extended the amount of time along with that if you're going to make a contribution to an IRA or an HSA that you planned on having an impact on last year's tax return. So those also got extended. Another part of that came out was, a lot of you, if you remember like me, I was trying to get a glass appointment. Well, good luck. You couldn't get anywhere to get your glass exam or dentist or a lot of other things unless it was an emergency. You couldn't even get to see the doctor. So a lot of you had HSAs or FSAs, and you weren't able to use it last year, especially on the FSA or the dependent care benefits. You were home, right? So you weren't using the daycare, or you couldn't use the daycare. So you had those monies you set aside. Well, they've now said that you can roll those forward to this year, and so you won't lose that. So I want to make sure, you're aware of that. Most of you, I think, are if you have them, but that is a big deal. You can roll that forward, and you won't get dinged for it when we do the tax return, and you won't lose the money because a lot of that's use it or lose it. You won't lose it. You can roll it forward, and there's also a big expansion on the dependent care benefits up to $8,000. We'll probably cover that more post-tax season when I have time, but just be aware that's a much larger opportunity. And that may work out for a lot of you that already had the dependent care rolled forward and then the other ones. So I think that's going to be a good thing for a lot of you, and I want you to be aware of that. Okay, but then there's the bad news. They did extend the time to file, and they did extend the time to pay, but they did not extend the time for estimates for next year. Why? I don't know. They do what they do, and we just have to live with it. So that causes some problems because the tax season started several weeks late. A lot of us have had a hard time getting our stuff together. We're behind, and now we got to do estimates, but we don't have time to do the tax return. So there's a couple things there. One, it's an estimate. So if you don't have it exactly right, they're probably not going to ding you too much. Secondly, one thing you can do, just as a safety, is look at what was done in 2000 for last year's estimates, right? Look at that and make the same payment. And what I want to do next is I want to take the time to show you how to do it electronically. You can do this for estimates. You can also do it for your regular tax payments. So we're going to take a few minutes. I'm going to take you to the IRS's website, walk you through how to do that, and then hopefully that'll help a lot of you get these estimates and extensions, not extensions, but the estimated taxes paid, as well as just show you how to do your regular payments. I know some people are afraid of it. Truth is, if the IRS wants your information, they can get it anyway, so not really gaining much there. And when you do it this way, you can print off a receipt right then that shows that they got the money and how much and when. So it becomes real hard for them to try to give you a penalty saying they didn't get it, because you can prove they got it. And that's why I like it. I've got a record and I've got instant that they got it, so they can never say they don't. And if they do, we got them covered, right? So that's why I love it. So let's go ahead and switch screens and we'll move to that now. Okay, here we are. We're at the IRS's website, irs.gov. And in order to get started, you're going to go to make a payment. And then you can do direct pay or debit card, credit card. My opinion, do direct pay, because they're going to hit you with credit card fees. So A, I don't want to pay taxes anyway. And B, I definitely don't want to pay a penalty for paying taxes in the form of a bank fee at 2 to 3%. So I'm going to go with direct pay. And like I said, I know some people are nervous about giving this information to the IRS. The IRS already has it. So if they want it, they're going to get it. You're not protecting yourself by keeping this from them. They can get it if they want it. Okay, so here we are. And they're telling you the deadlines have changed. But remember, that is just for last year. Estimated taxes are still due on time. Just go ahead and make a payment. And the reason for our payment is, in this case, we're talking about doing an estimated tax payment. But if you owed, you could do a balance due. But we're going to do estimated tax. And we're going to apply this to the only option there is. And for our period is 2021. Yes, that is what I want to do. Go forward. And then we're going to use one of our prior years. And so this is where you're going to have to get a copy of last year's tax return and use it to verify. So your 2019, 2018, whichever one you have in front of you, you will then go through and verify that you are who you say you are. So we're going to do that here real quick. All right, so now I've confirmed, and then from there, we're going to say how much we're going to give them, whether that's 1,000, 2,000, 100,000, whatever you need to do. You're going to put the amount in here, confirm it, say the date you want to do it, which in my case, I would say April 15. I would then do my routing number, my account number, which on your check, your check will have 9 digits between the semicolons, just like it shows in the picture. That's your routing number, and then your account number is the other one. Make sure that you don't pick up the number that's the check number. Sometimes down there, the check number will be down there as well. Make sure you don't mess that up. Put the account, put the email to confirm, and continue, and then you're going to process your payment. So there we have, you can quickly, easily, and cleanly pay the IRS, get a receipt that very same day, and have it done. So that's how you do an IRS payment for an estimate. That takes care of filing your estimate on time. You can do all 4 of them that way. It works great. You can also pay your federal tax debt. That works fine. So it's a good, simple, clean process. All right, so let's go ahead and take a look at, let's look at Kansas. Okay, so when you get to Kansas website, you're going to go to kansasrevenue.org or ksrevenue.org, and then go to the taxation tab and make a tax payment. From here, you are going to have to actually set up your account to register. So in order to register, obviously you click the little button that says register now. You also, when you get down there, you're going to want to say accounts. You're not trying to do exemption certificates or tax credits. You're just wanting to set up an account. So go ahead and click that and do the CAPTCHA, I'm not a robot, and continue. Verify all the information is correct, and then register. Okay, now we've done all that. you'll end up at this area here, and you're going to add an account, and then don't get bogged down on all this other nonsense. Just hit the individual account page. At this point, then, you are now where you need to go in order to do payments to them for your stuff. Now, in order for this to work, you're going to have been a Kansas filer in prior year. So if you're brand new to Kansas, this won't work. In that case, you're going to have to get a paper one and mail it in. But if you've been there before, just like the IRS, you're going to need to get a copy of your tax return from 19, look at the amounts for the adjusted gross income to verify some things, do that, and then just like the IRS, you will then be able to go ahead and make a payment, and that's where you're going to do this. So that should get us all squared away on Kansas. At this point, let's go ahead and take a look at Missouri. Okay, so we're going to go to Missouri Department of Revenue, and then within here, right on the front, there is a square in order to pay the taxes. So Missouri Department of Revenue, which is dor.mo.gov, click on the Pay My Taxes, and then really, in a lot of ways, theirs is simpler than Kansas. You can just make a one-time payment, and you don't have to do as much of the setup stuff. So I would just like to process a payment, and then you're going to tell them that I want to do a personal income tax, and it's going to be an estimated tax payment or a tax due, depending on which one you're trying to do. Or you can't even send a payment along with an extension as a most 60. So you can do all three of them here. Very simple. So let's just say we're going to do an estimated tax payment, because that's what I told you we were talking about. Then you enter your social, and then at that point you're going to go in and enter the payment information. And Missouri's is really simple. They don't require you to set up an account, so that it is a lot easier. Although you may take the time to go ahead and set up an account with them if you want to. There are advantages to that as well, because then you can see status of things, and there are some nice features to it. But for the most part, for most of you, just going in and making the payment, print the receipt, put it in your folder that you keep for taxes, or like a lot of us, we're starting to save things online to, we use ShareFile, but you may be using OneDrive or whatever. There's so many different options. But save it digitally, then you have it and it's there for you. So that's it. That's all you got to do to make your estimated tax payments. If you don't have your taxes done, I know this isn't the right answer, but do the best you can. It is an estimate. Just making an estimate based off of whatever you did the prior year. Do the same amount. If your income was up, adjust up a little. If it was down, adjust down a little. That will get you in the ballpark. And then when we do the tax return, we can make up the difference as necessary on second, third, and fourth quarter, and that should take care of most of you. So hopefully that helps. And then, we'll just keep plugging away, and this season will be over before we know it. Talk to you guys later.